unfortunately, we were unable to get closing figures when it comes to the performance on the NSE 20 today. So share some light or shed some light for us on the kind of activity we've seen play out today and where the NSE 20 ended.
I would say largely there were more advances than declines today. Across the board, most of the share prices were generally on an upward trend, although not very, very significantly. The main gainers today were CFC Insurance Holdings and the East African Portland Cement. And on the declining side, we had Everready and TPS. So I think generally, I think we'd still expect the market to have gone up and the NS index to have trended up as well, though marginally.
Let's take a look at CFC Insurance Holdings because you highlighted it today. It was, of course, a star performer yesterday with that share price having increased just over 6%. And we're looking now at a share price that's nearly tripled since listing, lifting the company's market value to 8.8 billion shillings in 2 weeks. What's your view on the company at this stage?
I think it's all a matter of valuation. When you look at the introduction, the price that was set initially, it was very, very undervalued relative to the what you'd consider to be the fair value of the company. And one would expect the price to continue trending upwards until at least it's reflecting what the current assets and the growth prospects are. So I would say it really depended more or less on the entry level price, which was, I would say, very, very well structured.
Some saying at this stage we are sitting pretty close to the ceiling based on the firm's fundamentals. Do you share that sentiment?
We are very, very close to the top. I would actually agree with that, yes.
So let's take a look at where you'd be delving in. If you've got to put CFC Insurance Holdings next to its sister company, of course, that being CFC Stanbic Holdings, which holds a subsidiary Stanbic Bank and Stanbic Financial Services, where would you be placing your bets right now, if in any of those two?
Well, apart from CFC Insurance, I would still more or less go with the banks. I would go with CFC Bank and of course the general banks as well, especially the blue chip banks. Having seen their performance and looking at the current environment, especially looking at high interest rates and continuing of high inflation, we generally think banks are likely to continue performing well this year. And as indicators would go by, net interest spreads are still above 10%. And when you look at the way they are growing their loan books, definitely they are likely to continue performing better compared to other companies.
Let's take it without outside of the banking sphere, because we've had some companies making headlines today. Kenyan's announced that it secured a 7.4 billion shilling loan to finance a geothermal plant. Market reaction to that news?
Taken very, very well, of course. But then, of course, again, that's likely to take some time before it actually starts reflecting on the earnings of the company, given that it's a medium-term project. But I would say in terms of the dynamics of the electricity generation, it augurs very, very well for the country and for the economy, because basically it tells us that in the coming years, there will be a less dependence on a thermal or diesel generated electricity, which is also currently what is causing inflation to push up and causing a lot of misery to producers. So I think more dependence on geothermal and hydroelectricity is definitely what the economy needs. And I think in the next 5 years or so, this information or the impact of that will definitely start reflecting in the earnings of Kenyan. So yeah, Kenyan is definitely a stock to watch.
Isaac, any mention at this stage of how exactly this loan is going to be financed?
Unfortunately, I don't have the exact details of that, yeah.
Well, we'll have to wait to see detail unfold on that front, taking a look then at short-term implications and, of course, long-term effects and how that's going to filter through eventually. In the meantime, KPLC within that space has announced that it's planning to raise power costs, increasing electricity prices to cover for the rises in fuel prices that we've seen in the international market and the weakening of the shilling that's come through locally as well. We're looking at a rise from 5.73 shillings per unit to 6.15 shillings. How have you interpreted that move?
I think this was largely expected, especially in line with the continuing drought. Because the bulk of the country's electricity is generated using hydro, whenever there's drought, there's usually a switch to thermal electricity, which generally tends to be more expensive. And what is more complicated this time around in addition to drought, there's actually higher fuel prices, diesel notwithstanding. So the combination of that was inevitable, that ultimately KPLC would have to push this cost to consumers. And the worrying bit about that is it basically implies that we haven't probably seen peak inflation. And as much as we've risen to 12% headline inflation, we still think that that is not the highest rate that we are likely to experience, given that cost push factors are still at play. So probably in the next 2 months or so, we might just see, peak inflation, and that might probably depend more or less on, whether the long rains are going to continue this month. Yeah. If they're going to continue, then perhaps we'll see inflation subduing, and of course, power costs are likely to come down. If not, then of course there'll still be a more concentration on thermal generated power, and of course power costs are likely to continue going up.
The investment merit, as you see it, in KPLC, because of course this comes on the back of the fact that we're seeing this company rolling out the prepaid meters across the country as well, and that's anticipating to see revenue collection increase, as well as reduce costs associated with the disconnecting and reconnecting of meters if consumers default on payment.
Yeah, we think KPLC right now is definitely a company to watch, and especially that that aspect of switching to prepaid is going to lead to substantial cost savings moving forward, and efficiency factors as well. And we think that that is going to be reflected in starting this year's earnings outlook, and of course even next year and moving forward. Perhaps from next year is when we are likely to see the major impact of that. So we think by and large KPLC, relative to the current challenges that the economy is facing and the business environment here, it's still one of the companies that are likely to continue performing well, even moving into the future.